Hi guys, a very good afternoon and welcome to Business Lunch. I'm Pavitra Parekh. Those are all of the headlines that we are tracking for you at lunch hour. So there's lots to talk about, especially ever since, we got that action from the Bank of Japan. And ever since then, our markets have sort of just moved much lower. So for now, we're just slightly off the day's low, but it is still around an 0.8% cut that we are seeing on the frontline index. The mid-caps also completely in line today. So we're seeing around 250 points gone on the mid-cap index as well. The banks is where we're seeing slightly better action. But still down around 0.6% on the banks. So a few of those stocks. But by the way, take a look at the rest of the Asian markets if you want to feel slightly better. You have Hang Seng, you have Nikkei, all seeing cuts of over 1.5% right now. So that's definitely looking quite weak. The Dow futures also off the lows, but still around 150 points in the red. So do keep that entire global picture in mind as well. For our own markets, we are seeing deep cuts come through in the metals pack. So a few of the larger names will be up for you. Take a look at all of those. And also auto has slipped in the past few minutes. So a lot of the top losers on the Nifty today are some of these auto names. We'll talk more about the market action in just a bit. But first up, let's talk about the Bank of Japan because it shocked the global financial markets by increasing the cap on the 10-year yield from 0.25% to 0.5%. Now, Asian equities fell across the board and the yen strengthened after this announcement. Lata joins us now with more on the sudden announcement from the Bank of Japan. Lata.
Well, basically, the Bank of Japan was controlling the 10-year bond yield at 0.25%. Starting today, the yield will be allowed to rise up to 0.5%. We must remember that this has been a very loose monetary policy that the BoJ has been following since 2014. And that policy is changing now, has been interpreted to change because of higher inflation that Japan is facing. Japan is facing an inflation of 1.99%, which is the highest inflation since 2014. And therefore, this move is being interpreted as tightening. There is risk off in the markets because it is seen as the last major central bank also moving towards hawkishness. It was the most dovish of the banks. Even that one has tilted. And the interpretation on the street is that this is as serious a move as the earlier pivot in 2014 when the Bank of Japan and the government went extremely dovish. This is seen as big a pivot as that. And the expectation is that now they will completely exit from the loose monetary policy. What this basically means is that, you could, while everybody else was tightening, you could still borrow yen cheap for various needs. Now even that resource becomes expensive because the yields have moved and the market believes that more tightening will come, and that's why you saw the risk off across. Basically, it's telling everyone after the previous week's statements from all major banks, the Fed, BoJ, ECB, Bank of England, Swiss Bank, all of them saying that they intend to be more hawkish. Here's one more coming. It clearly looks like all central banks are going to make money more expensive. That's why you saw this risk off. All risk assets like equities and commodities took a beating. In India itself, you saw the 10-year yield go up. And no one was prepared for this. That was the big thing. A poll done by most of the agencies did not expect anything from the BoJ today at the policy meeting. So it's completely a bolt from the blue. Also because the BoJ Governor Kuroda is to retire, his term ends in April, and the expectation of change in policy was only in April, and that's why the reaction of the markets has been even more sharp.
All right, Lata, thanks a lot for taking us through all of the details coming out of Bank of Japan as well as what the governor had to say. In fact, the press conference by the governor of Bank of Japan was just around an hour ago, and he also said the Japanese market's functionality was hit by volatility abroad and that the trajectory of the economy remained uncertain even into next year, that is into 2023. He also said that the bank estimated inflation to fade by the second half of next year and that the bank in this case would not hesitate to ease rates if it was necessary. In fact, he also expressed confidence that the positives of the policy would ultimately outweigh the side effects. So those are some important comments coming through from the Bank of Japan governor. On the same note, we also spoke to Abhilash Narayan of Standard Chartered Bank and got in his views on the announcement made by Bank of Japan. So let's listen in to what he had to tell us.
Effective tightening of policy came as a surprise to the markets, and that's why we are seeing such sharp market reaction. I think the other reason why we've seen equity markets slide down is because Bank of Japan was the last bank which was still holding on to accommodative policy. So with the shift that we've seen in Bank of Japan's stance just now, what it means is that even the most dovish central bank is looking to effectively tighten policy by allowing bond yields to move higher, and that at the margin has hurt the sentiment for the equity markets. Equity markets could remain under pressure for the next few sessions, given the shift in policy that we have seen. If I look at the implication for, let's say, Japanese yen, we've seen that dollar yen has moved lower by around 2.8%. And what today's move can mean is that we could see dollar yen touch even 130 potentially over the next couple of days. So that could be the big move in currency markets. But yes, it's the timing and the surprise element that is leading to such a sharp market reaction, in our opinion. We are still a bit more cautious on the equities over the next 1 to 3 months, and we've recently gone underweight global equities as well.
All right, that is the view coming in on the Bank of Japan's surprise move. But let's also talk about some individuals.